Thanks everybody for coming. We really appreciate you being here. We've got tens of billions of dollars in assets under management on this stage, ready to deploy. So try to pay attention to what they have to say. Why don't I just go right down the line, and why don't you each just give a couple of minutes about, what your firm is about, assets under management, publicly, privately held, sectoral focus, regional focus, and we'll just kind of go straight down the line for some context. So Jenny, starting with you.
Hi everyone, I'm Jenny Lee, GGV Capital. We are a global venture capital firm, invest across multiple stages. We manage $6.2 billion US dollar under management. Our latest fund, which we just closed last month, is $1.88 billion. And that's across the early stage and kind of mid stage for us. Historically, we have invested both in the US and China market, and Southeast Asia is an emerging area for us. Over the last 18 years, we have about 300 investments, created over 46 unicorns, and then of course, quite a couple of internet IPOs as well.
Okay, Ning.
Hi everyone. My name is Ning Tang. I'm founder and CEO of CreditEase, a Beijing-based FinTech company operating in China and investing in FinTech globally. So we invest in FinTech companies through $1 billion, probably the largest FinTech dedicated direct investment fund in the world, into FinTech companies globally, and also we invest in funds. Yeah, so we work closely with FinTech dedicated funds, and also with funds with FinTech focus, like Jenny's fund. And before CreditEase, I was angel investor, VC, and I got to know Jenny 13 years ago, co-investing into a company, and so love to work with entrepreneurs and investors in this region and globally. Thank you.
Tripp.
Sure. I'm Tripp Schreiner, a partner at Point72 Ventures. Point72 Ventures is part of a global asset management firm called Point72 that's based in the United States but has offices globally, including London and a number of cities here in Asia. Point72 Ventures focuses on three primary areas: AI and machine learning, and really their application across the global economy; more enterprise software, deeper on the infrastructure, things like cybersecurity; and then lastly, FinTech. On the FinTech side, our remit is quite global. We look at most sectors across FinTech, spend a decent amount of time in consumer, but predominantly are focused on the enterprise side of FinTech. So thinking about the new forms of infrastructure and enabling technologies that banks, startups, and other financial services providers can use to improve their operations, to create new products, or to better serve their customers.
From Tripp to Tryb, I'm not having the $1 billion, I'm more on the $1 million side here of the panel. Markus from Tryb Group, I represent here the Singapore ASEAN FinTech investor. So Tryb invests in ASEAN FinTech. What does it mean? We, on the one hand side, invest in digital financial services, so more the emerging financial services that are coming up in the region, in banking and insurance, lending, payments. On the other side, we invest in enterprise technologies, anything that makes the bank or institutions better, cheaper, faster, so the B2B side of things. Tryb invests in companies along the company cycle, early stage to growth stage. However, as ASEAN is still early stage, we at the moment focusing more on the early stage investments to back the upcoming entrepreneurs in the region to change the industry.
Okay, I've heard a couple of things about sort of infrastructure, enterprise solutions, and then also kind of more cutting-edge, consumer-facing type plays. So let me ask each of you, what are you excited about now? What do you think, what part of this ecosystem really needs investment, and where are you putting your money? And also give me a couple of examples if that's interesting to you. And maybe we'll just, whoever wants to start, Jenny, go ahead and start, and then anybody that wants to jump in.
Yeah, so when we look at it from a venture perspective, it's always about identifying what's the most pressing need within the ecosystem. So when we look at FinTech or FinTech investments in Southeast Asia, we identify two big areas. The first trend is that when you look at Southeast Asia, you have a huge up and coming mobile users, consumer, whether it's the 120 million mobile internet users in Indonesia or the up and coming, 20, 30 million in Vietnam. So what's lacking there is that you have disparate countries, disparate GDP growth. But what's important is that there is no unified third-party credit bureau or credit similar to Experian in the US. And so we are interested to look at companies, technologies, back-end infrastructure that can actually allow, and could be in the form of startups with a good product or tool to capture those emerging data about all these different groups of consumer and how to make sense of those data to create new credit profile. I think in FinTech, a lot of it is about risk management, risk profile. And if you can get it ground one to acquire those data, make sense of the information, have that credit rating, it's something that we're very interested in. The other trend that we're looking at is that, again, because this demographic in Southeast Asia is quite different from China and US, a lot of the consumer are getting onto the banking, getting on internet, consumer, e-commerce, first time on mobile. So I walked around the panel as well, the exhibition. You see that Southeast Asia has the most number of mobile, up-and-coming mobile wallets. Whether it's mobile wallets by carriers, mobile wallets by the banks, mobile wallets by the infrastructure, Grab, Pay, for example, there's going to be a huge proliferation. But when you have mobile wallet, people transacting first time on the mobile internet, there's going to be issues, right? Whether it's fraud issues, security issues, currency issues. It's something you don't deal with in the US or in China because they deal with single currency. But when you're trying to send $10, right, or 10 rupees across a mobile wallet, a lot of fraction of entities has to be involved. So where are the companies that can do the connection, that can do the security, that can do the verification for all these different groups? So those are the two big areas, in my view, would be key pressing need for the next 1 to 2 years.
Okay, it's fair to say there's a lot of money in cross-border payments as well.
Absolutely. So we may not make money trying to lend to individuals or to enterprise, but we're more interested in companies that can provide the infrastructure, the tools and shovels to enable all this across the back end, mobile wallet and credit profile building.
Okay, terrific. Ning.
We are passionate about FinTech globally, every subsector. Yeah, but our portfolio probably can show, the different development stage of each market. In the past 3 years, we've made over 30 FinTech investments in the US market, about a dozen in the UK, continental Europe, and Israel. A few in Southeast Asia. We need to catch up. That's why I'm here again, yeah. And a couple in Africa. So that gives you a sense, where we focus our energy and capital. Of course, in China, that's half of our fund. We are very aggressive in China, the world. One of the two biggest, most leading FinTech markets, like the other being the US. But I think in terms of different subsector, payment, marketplace, lending, credit tech are more advanced. But you have like insurance tech, wealth tech, so on, reg tech coming. Yeah, also those like infrastructure, like opportunities we are very interested in. And generally speaking, we focus on working with great entrepreneurs. Yeah, so all about people. Yeah, and also great investors. Yeah, so we look for great people with like two kind of key capabilities. One is the financial services side. The other is the tech side. So the guy has to be a integrated solution, like to make the company a winner.
Okay. It sounds like you're not quite as, and I don't mean this in a bad way, but you're not as disciplined as Jenny is in terms of these are our sectors and this is what we focus on. You're more looking for talent wherever you can find it, kind of in a broader, casting a wider net. Is that?
Well, micro level, we are very disciplined.
No, of course.
Yeah, we pick up the winner in each niche market, in each specific market.
I knew you weren't going to like that word.
And also in each fund type. For example, example, like, in Jenny's case, like, I'm a big fan, right? She never sleeps, and she's always ready to fight with the entrepreneur, for the entrepreneur, so we focus on people, yeah.
Okay. All right,
So
okay.
Tang is a CreditEase is an ecosystem player. So they have upstream, downstream players. For VCs, because we are financial investors, CreditEase and the ecosystem actually is a very good partner as part of this.
All right, okay.
You make money in different ways.
Yeah.
Key is to make money.
Yeah, okay, all right. I think we should have separated the two of them.
Yeah.
This is...
Well, I'll piggyback a little bit on what Jenny was saying.
Because let me, before you, you're not based here, right? You don't have boots on the ground to look at to get pipeline. And you're in the U.S. And how do you sort of think about opportunity as sourcing, and what looks?
Yeah, so I guess I'd offer two perspectives on that. One, sort of philosophically how we think about the global market, and then one tactically how we go about executing on it. I think philosophically what we're seeing globally is a proliferation of new types of consumer financial services and new types of financial services players, whether it be new de novo fintechs or neobanks or technology players in Asia who are starting to incorporate financial services into their platforms. What's consistent across all of those markets, despite the fact that the consumer-facing players are different, is they all need that similar underlying infrastructure. They all need to worry about fraud. They all need to manage accounts and how they do lending and how they manage payments. And so where we tend to focus our time is on the picks and shovels really across those geographies, recognizing that there's a good degree of consistency across those. In terms of how we tactically go about doing that, to date, we're pretty geographically dispersed in terms of our portfolio. We've got investments in the US, Europe, Latin America, Australia. I think more often than not, we recognize that if we're really going to get ingrained in a market, we need to have boots on the ground, people who really understand local dynamics, whether they be regulatory or technological. But I think the insight that we're able to offer both to entrepreneurs and then to some of our local investing partners that we partner with in some of these markets is that global perspective around what's happening across financial services and the types of tools and technologies that you need to execute on them.
Okay, so we'll touch on this theme a little bit later in terms of your relationships with the underlying companies as well. But Markus.
Maybe the Southeast Asian Singapore view of the world. Taking actually two examples from our portfolio right now. On the one hand side, you're dealing in Singapore with very established financial ecosystem, established technology systems. So we invested in a company, Shinsei, who are digitizing trade contracts. So everyone talks about supply chain and blockchain and whatnot, exciting things. If you don't have the contract actually digital in a format, you can't actually even put it on a blockchain. So Shinsei is doing exactly that. They are digitizing the contract at origin to make shipping and trade, and Singapore has a big trade port, as you know, with providing an ecosystem there. That's kind of the B2B digitization aspect. On the other side, we invested in First Circle, a lender in Philippines. They're probably more on the fin side. They are offering SME loans to the emerging SMEs in Southeast Asia, Philippines right now, and are really, I think, challenging the incumbents on that side. So that's where you have to really go down to the level of, there's no even loans in some of the islands in Philippines. Most of the transactions are on paper again. How do you move from paper to the cloud? That's really the biggest step there. How do you provide a credit scoring, a risk management system that are better and cheaper and faster than of the banks in the Philippines. So we can see in Singapore a B2B approach of those bigger ecosystem plays, and in Southeast Asia a lot of lending and payments coming up. I think in terms of what is happening a lot across FinTech in Southeast Asia is APIs. Many of the FinTechs are partnering up. Many of the platforms, let it be Grab or Gojek or others, have APIs now to share data, to share more of the network flow to really become ecosystem in itself. And I think we like to have an investment thesis. We like to invest in APIs because you're becoming stronger and stronger as a company, as a bigger network you have.
Okay, so we've touched on this sort of infrastructure question a couple of different times, so let's dig in a little bit on that. You know, at the Milken Institute, as you know, we're a global think tank, and we do a lot of FinTech work. We have a FinTech Advisory Council and care, I think, deeply about what FinTech can mean for access to capital and for sort of economic growth. We held a high-level payments roundtable earlier today. There was a lot of complaining going on at this roundtable, I must say, about difficulty of scaling across the region, different regulatory jurisdictions, lack of infrastructure there that is needed. And when you guys kind of approach problems like this, do you think of these infrastructure plays as not loss leaders, but as kind of you have to get it done because otherwise the market won't develop? Or do you think of these as real opportunities? And then if you can address a little bit of this, are you approaching this kind of market by market by market, or do you actually have fantasies of global platform plays, or at least Asia-wide platform plays? And to mix it up a little bit, why don't I start with you, Tripp?
Yeah, so I guess I'll take that in two parts. To your question of how we perceive infrastructure and the investable opportunity there, I think particularly in the US and Europe, one of the interesting things to note is if you ask someone what the biggest financial technology companies are in those regions, it's actually the legacy infrastructure providers. It's the Fiservs and FISs of the world that provide the plumbing for a lot of the financial services space, but aren't the names that people talk about. And so we see, just with those as representative examples, that the next generation of businesses providing those types of services have an opportunity to become incredibly attractive companies. I don't think they're going to get as much coverage and aren't going to be as well known to consumers, but from an investment perspective are certainly attractive to us. To your second question around how we view individual geographies, I think it's certainly something that you have to be cognizant of. I think because we focus more on underlying technologies, we tend to be able to avoid certain local nuances that need to take place that you would be more exposed to on the consumer side.
I think, sorry, Jenny.
Yeah, jump in, and not everybody has to answer every question, just if you feel like it.
I kind of feel tech is tech, to be honest, and tech, you have to build tech from the get-go as scalable and modular as possible. There's kind of a CTO type challenge there. It really comes down to who do you know, who do you go to bed with in the markets, who's your partner.
Who do you, excuse me?
You know, who's your local partner?
I see, okay.
And who's really the JV partner on the ground, because who are the people you know to really help you scale, right? If you go from Singapore to Indonesia to Philippines, it's a different legal environment, different regulations. So who can help to really make that work? The technology kind of put in place, you have to localize it with languages and maybe different kind of UI, UX. But the underlying, really, the team in itself and how you structure a company might be different going from different country to country. So I think that's where B2B from New York, London, Singapore might be easier because you can just scale across these markets. But if you are here, again, Southeast Asia, I see quite a bit of help needed, and Tryb likes to think we like to help these guys to go from A to B with a good team behind you and a partner on the ground that really helps you scale.
So I like to give an example of something we see in China. When Alibaba first started, they had Alipay. And you can call Alipay a loss leader because no one makes money processing payment, or very little processing payment. But what Alipay does is that it acquires merchants offline, it acquires online, it builds the entire infrastructure to allow kind of mobile payment on the fly. While Ali doesn't make money per se on each transaction, they actually were creative enough to build on top of that. Because people was using Alipay, it became a virtual wallet. Because they had virtual wallet to transact for e-commerce on Taobao, they decided to attract deposits where you can now earn 3, 4, 5% deposit saving if you leave your wallet flush with cash. So I think the point I want to make is that if you are a startup trying to look at this system, you shouldn't be building a loss leader just for the sake of building a loss leader, right? In the case of Alibaba, they had a longer term vision. It was step 1, step 2, step 3. Ultimately, it was the step 2, step 3, the FinTech piece of it. Obviously, the Ant Financial guys are expert in this, but it all started with allowing and proliferating the whole concept of mobile and online payment. I think similarly in Southeast Asia, I mentioned before, the issues, the challenges here are a lot more pronounced because you have different currencies, different mobile wallets. And so I'll encourage that, and so what that means is that you are, even if you're building a loss leader, actually I think you can make money from that loss leader because that infrastructure built at the back end is such a pain point that merchants are willing to pay for it, banks are willing to pay for it. Whether it's in establishing credit profile or again, facilitating transactions. So know what you want to do. It's okay to start with loss leader. Grab, all of you users Grab, right? In Southeast Asia, another one of our investment. In the early days, Grab doesn't make money because they are allowing drivers to make money by servicing the consumer. But once it becomes a habit and it's something that you cannot do without, there are other services you can leverage them, whether it's for delivery, whether it's for payment. So again, I think the concept of building big companies, unicorn companies, platform companies is that you don't stop after you hit 0 to 1. You continue to think about how you're going to look like in 10, and then you invest towards it. I think there's opportunity for multi-super unicorn in Southeast Asia, but you have to do the tough work first. And if you do that, whether it's marrying technology with industry knowledge, you have a chance to build giants in this market.
Pan-ASEAN? Pan-ASEAN, or do you just have to build it in big countries?
I think that the opportunity is Pan-ASEAN. If you have the capability, the right people, the right profile at the back, target Pan-ASEAN. That's just so much of a bigger market. Now, obviously, if you are targeting Indonesia, right? If you look at Southeast Asia, I think Indonesia is a huge attractive area. 200 over million users, 120 million mobile users. That by itself is large enough to cover the rest of Asia. And so if you have to pick a country, try and pick a big country. I'm a little hesitant when folks pick smaller countries because you're playing in a small pond. And so your ability to leverage that learning on a cross-Pan-Asian becomes a little bit more limited. And you'll be faced with, and if you're successful in that local market, you're going to have clones who may run faster than you on a Pan-Asian basis. So in Asia, the dynamics is actually a lot more competitive. Startups shouldn't think that if they're number one in a tiny market, they're number one. They should really look above and look at what else is happening, especially in the financial space where a lot of it is operating and financial capital leverage on the lending side.
Now, Ning, some would say that you are based in a big country. I think that's fair to say that that's true, yeah. Can you, as a Chinese company perspective, can you talk about your, what is the outward strategy? How are Chinese companies thinking about it beyond China market, and how are you helping them get there?
Yeah, so we see three different approaches about Chinese companies going outside of China. One is just go to a market and do business on your own. Yeah. Another one is you find a local partner. Yeah, having different strength. You have know-how. Your partner has know-who, and so you can do joint venture, and that's another approach. And thirdly, which is our approach so far, is to invest into leading entrepreneurs, leading companies, leading funds in a new market. I'm not going to say, which is the right way. I think it's really a company strategy. But indeed, companies, FinTech companies in China, in the US, are lucky in that their home markets are very big. Yeah, so when we invest in the UK, our first question or second question will be how to grow outside of UK, right? Like how to grow in Europe, right? So I was quite encouraged this morning to see the API-X exchange. Right, that makes regional connectivity very convenient, very easy, great for FinTech companies. Also, last week in Shanghai, Import Expo, I met central banker from Lithuania. Yeah, Central European, East European, very small market. But the regulators there are working on making Lithuania a kind of connection point. Yeah, so you go there, and instantly you are connected to the whole European Union. Yeah, which is very nice. Yeah, so I think. These days, people, including entrepreneurs, investors, regulators, are focusing on building this infrastructure, connectivity, so on. Yeah, which is great.
All right. Now, of course, I'm not talking about anybody on this stage because I know you're all very disciplined investors, but I would like to ask a question about the VC kind of market more broadly. How's the froth? How are valuations? How much money is chasing deal flow? And also structurally, has it evolved, or is it different here than it is maybe what I'm familiar with in the U.S. in terms of the kinds of LPs that you have, the exit strategies, et cetera? So Markus, why don't I kind of start with you, and if you could share some thoughts about that.
This is often up. Perfect. Thank you. Yes, it's changing. The number I read yesterday, I think there's $19 billion in capital kept in VC funds in Southeast Asia. And there's $2.3 billion apparently in dry powder available for VC deals in Southeast Asia. I don't know. So the number, I think, are at least saying the right direction. There's a lot of liquidity in the market in Southeast Asia. A lot of funds are chasing entrepreneurs, even though many entrepreneurs are complaining about not being able to meet the right funds. But I do believe in this region of the world, you do have a lot of capital. You have companies, funds like GGV coming in to say, we'll look into this now. I think there's a lot of outside capital coming to the markets to back B, C, D rounds. The ticket sizes are getting larger and larger. Funds are getting larger and larger. So we believe there's a bit of a gap in the early stage. So many angels got burned the last few years, so there's not many early-stage funds at the moment here in the region. Something to maybe get fixed. So that's one. I think secondly,
so
what I see also...
That's your niche then, that you kind of focus in on the very early stage.
It's a good recommendation to do, let's say this way, yeah. Secondly, I think that the LPs are also changing. The ones who are investing in funds are changing, at least in the region again. Many of the early stage funds in the past 5-10 years have been the family offices who invested in the region to kind of understand this tech thing. Now we can see our family offices do more direct investments. We can see how many of the third generation of the family businesses in the region are starting to have their own funds who are challenging the funds that are already in existence. So I think the VC, CVC, and the family office structures are changing quite a bit to really be more strategic in nature than just giving capital. Because as we just discussed, scaling is tough. And how can a fund be really more supportive? And I think in terms of FinTech, we can see how it becomes a more long-term game. Many of the FinTech VCs are struggling with the fund lifetime. It's, FinTech takes very long. Sometimes a sale can take 3-4 years. So it's a bit of a question how a VC can really help with that long sales cycle. So I think there's a few changes happening on the market. In terms of valuations, I'm happy to see that ICOs are washed out in the market, and we can see how that now the next rounds of capital being raised equity-wise are a bit more reasonable. Yeah? So it came down a bit. So that's we like it, obviously. Yeah.
Does anybody else want to comment on there, or?
So maybe I'll just add. So I think VCs goes in cycles, and the cycles coincide with technology disruption or innovation. So I would say that the froth is coming to an end. We see it in the US, we see it in China, because it's the two markets that we are playing. And why is the froth coming to the end? Because we are also entering a time where mobile internet, new penetration, new user adoption has plateaued. Even if you look at China, 1.4 billion in population, we now have 800 over million of mobile users. WeChat users has already exceeded 1 billion, right? So now you're trying to squeeze users or acquire users in the far-flung part of China. It's the same US penetration is over 90-some%. So it's a time of reckoning. The big internet companies, the ones, the super unicorns that are public, are having to deal with growth issues. That has actually percolated down into the private investment side to startups. So startups are seeing that their growth, that hyper growth that they had in the last 3 to 5 years has slowed down. So along with that, I think the venture industry also has to prove that while mobile internet was big and growing, did they make money? Did they generate the right returns? Did they find those big unicorns? If they do, they have a license to continue to survive, which means they can fundraise, they can continue to look for that next wave of innovation. If they don't, there will be a change in terms of how the VC industry will look like. Maybe the 10,000 VC firms registered in China will shrink to 5,000. By the way, there are 10,000 in China. So I think time of reckoning, technology disruption coming to maturity. So what's going on is that investors alike, actually globally, we are looking for what's next. And what's next could be, are there new areas in consumer drive that can create new consumer behavior? In China, we have WeChat, and so the WeChat users are a new source of traffic to be acquired. It's very similar to when Facebook opened up that traffic. So investors are looking for those big ecosystem disruption. We are looking at how AI is changing industries. But where AI is concerned, it's targeting traditional industries, and by design, in enterprise tech, in industry, industrial tech, those just take longer time. It takes longer time to build a robot, put that robot to use, make sure the ROI works. And so we are entering an era of more steady growth, is my view. And that steady growth will translate into companies being able to build real product and services to change existing process, whether making it more efficient or really taking people out of the loop. So that's the next wave that we are seeing. And then maybe just the last part. Southeast Asia is a little different because unlike US and China where we are plateauing in consumer growth, Southeast Asia, as I mentioned earlier, has now that new wave of users getting onto the internet. And it would be remiss to sit here and not talk about India, right? India has been talked about at the same time for the last 17, 18 years when I was in China. Same time, but China just went 10 years ahead. But I think that India may be getting its stay in the sun, I would say, in the next 5 to 10 years, because that's another huge population of users that's getting onto the internet and getting access to very low rate, data, low cost data rate.
Right. Okay. That's sort of about opportunity, but I want to dig in a little bit more just on sort of the market structure. And when you see on the debt side these covenant lights and PIC, my chairman Mike Milken has jokes that he wants to start a PIC anonymous group so that people can confess their PIC sins in a safe space. Are you seeing this? Are you kind of find yourselves walking away from deals that you would have liked that are just too expensive, and do you see that coming down yourselves?
Yeah, I mean, we're certainly seeing it. I think what we're seeing, particularly as you get more to the growth stages, Series B, Series C, is a lot of funding going toward growth without, I think, a real sense of how the underlying economics of those businesses are gonna tie out. So particularly as you look at consumer FinTech, you've got businesses that are growing quite well, but with a relatively simple product or service set. And if you just look at the economics of those businesses, I think there's a real question of longer term what those look like. And so there's probably more you need to believe baked into late stage valuations than I think we at least are comfortable with right now.
Okay, we've got a lot of questions from the audience, so maybe Ning, I'll start with you. What is the best way for a startup to get in front of a VC? You meet so many startups all the time. Well, if I was a startup, what should I do to put my best foot forward?
I think first of all, you need to have a very unique, differentiated, interesting story. Second, I think you need to have some kind of networking capability to get to the right people, to listen to your unique, differentiated, interesting story. Once you have those elements, I think you have a great shot. Yeah, you are talking to the right guy with the right stuff. Yeah, so that's my 2 cents.
Okay, I'll give everybody an opportunity to comment on that as well if you'd like, but I'll sort of add another question to it, which is, what is your relationship with your underlying portfolio companies? Kind of how do you help them? What do you see as your role besides giving money? So let me toss that out to anybody that wants to.
Yeah, I'm happy to answer that because we have a fairly non-traditional approach to VC. We tend to spend less time in your traditional sort of partner board role providing strategic advice at the board level, and instead tend to focus more of our efforts, particularly with our early stage companies, around product development and business development. We have members on our team who spend quite a bit of time talking to prospective buyers of the technologies that we're looking at. And so when we sit down with a company post-investment, most of our efforts are focused around how do we help you get in the right doors at the right places to drive sales? Because from our perspective, if you're an early stage business, nothing helps you more than actually getting revenue in the door.
I think Southeast Asia, again, is complex markets and it's hard to scale. I believe many of the fintech companies in the region actually don't have sustainable cash flows yet. So many are riding on POCs, valuations, many have like these proof of concepts running around. So we like to think that as Southeast Asian economies are very dominant by conglomerates and family businesses, that's really where you have to go after. That's if you are looking to scale into Indonesia, Malaysia, let it be other countries, you got to be close to some of those families. And we like to help with those relationships in the region. In Singapore, you have very strong government. You have a lot of projects from the MAS, from the port, from, I don't know, the very long list, who you have to be part of. And I think that's something to be linked to. Talent is a big question in the region. We do a lot of work in finding the right people to be the right positions. Many of the growth companies are looking for now VP of finance, VP of tech, whatever it is, and you need to find the right people there, and it's not too easy, to be honest, here. I think it's difficult also in other markets, but here it's just a different kind of knowledge base. And also, honestly, I just go with them running a lot. So I believe in physical and mental well-being co-founders. So I do a lot of exercise with my founders, and we go out and have a good time as well. Yeah.
Is there a beer drinking element to the
running? I didn't say drinking, but yeah.
Jenny, any do you? I mean, I get the impression from Ning that you've got a kind of a tough love sometimes relationship with some of your underlying.
Entrepreneurs who work with me know how I'm like. So I think we talk about product market fit. I think it's the fourth ingredient that's very key to building successful companies. It's the VC and CEO chemistry. I think that's very important. While we can do strategic stuff, we do business referrals, things like that. But I think what's very important is that we see ourselves as a partner next to our CEO. Companies will go through ups and downs always. There's not a straight line. It's always a curved lines. And so we view ourselves as a partner who can help them, because we have built very successful companies in different times of the cycles. We brought companies public in the US, in China itself, in Hong Kong. We do have a wealth of experience. It's also about pattern recognition. We have seen how failure looks like. We have seen how it's like to sit beside CEO and have him fire his guys, wind down the companies. We have seen, we were there when companies go ring the bell for IPOs. And all that is it's a combination of all our 18, 20 years of experience working and detecting success, signs of success, and failure, right? We talk about KPIs for companies as leading indicators. I think VCs who have done it before, they do have a sense. It's like a leading indicator for what we see has those ingredients, whether it's product market fit with that chemistry. So there's a lot that we do. I think at the end of the day, what's more important, it has to translate into tangible results. And so I think the best people to ask would be the entrepreneurs. Yeah. Different strategies, different strokes we deploy.
Okay, so we've got about a little less than 2 minutes each. And what I'd love to do is to end by asking you guys a lightning round question that you can take kind of a minute each to answer. And, in the United States, they have these big charity dinners, and investors and owners of hedge funds come up and they pitch an idea for the audience, and you've paid, $10,000 to get a seat at one of these dinners. And so you don't have to kind of pitch a particular company investment, but if you had to pick, one thing, one region or one play that you are the most super excited about, that you want to give to the good people of this audience, what would it be? The next big thing that you're most excited about. And we're going to invite you back here next year, and we're going to see how well your idea did.
I can start.
Okay, go for it. Go for it. Because if you go first, then nobody's taken any.
Exactly, it's like making sure mine's covered. Yeah. So we've seen how payments solved the last mile, first mile problem in Southeast Asia. We've seen how lending is closing the financing gap in Southeast Asia. So we believe that the next year, if you want to put a timeline to it, we definitely see more innovation and maybe disruption on the insurance side. So basically that's where we can see how the different stages of FinTech, InsurTech coming together. So that's where I would maybe put a bit more focus on, not saying that others are not important enough, but I'm saying that there's going to be something coming up. So hopefully next we're going to have a bit more of a...
Okay, say a little bit more about the InsurTech.
So I think, so I think only 3% of Southeast Asia right now are insured. And it's a natural need of a human being once you have established or you moved up your Maslow pyramid of needs, that you are feeling the need to insure your car, your scooter, your house. And as wealth is more created in Southeast Asia, I think we see also more of a natural need to get insurance. Not necessarily through the incumbent insurance, again, riding on the back of the digital platforms, riding on the back of more verticalized ecosystems, ride hailing or e-commerce, where you have a more customized access to insurance that's more tailored towards your needs than just buying another life insurance. I think we're going to see quite a leapfrogging in the region on insurance, very untraditional, what we have seen in the West. Yeah.
Okay. Yeah.
I'll hit on not necessarily a particular sector, but a theme that we're quite excited about. And that's the integration of financial services into business software. If you think about Grab, for example, you are making payments when you are using Grab, but it's seamless as part of your Grab experience. Well, we think that can translate into business software where, if, for example, I'm a small business owner, rather than having to think, oh, I need a loan, I need to go talk to a bank or a FinTech, go through a process of getting underwritten and getting that loan, well, what if it was seamlessly and in more of a push than a pull fashion introduced to me? So I'm sitting in my accounting software, it recognizes that my cash flow is running low and delivers me a loan on the back of that. We think that there's a really good opportunity across accounting, HRIS, payroll to start to think about new means of introducing financial services in places where people are already living their day-to-day lives. Now, what that translates to in terms of an investable opportunity could go one of two ways. One is identifying best-in-class business software providers and helping them think about that financial services opportunity. The other could be thinking about more of an infrastructure opportunity and starting to partner with various larger business software providers and really be the financial services underpinnings for them.
Okay, push loans. I like it. It's like those credit card offers you get in the mail, if you're... What are you thinking, Ning? What do you got for us? We've had two good ideas so far, so the pressure is really ratcheting up now for the two of you.
Yeah, for us, it's always about great people. Yeah, because my experience is that as an entrepreneur, as an investor, FinTech, financial services, is a very serious profession. It's risk-centric. And is very socially meaningful. Technology is a neutral thing. Great people do great things with technology, and the bad people or incapable people can create trouble, big trouble, even crisis with technology. Yeah, 10 times, 100 times worse than without technology. So I think when we look for great companies, entrepreneurs, funds in FinTech, related to FinTech, we always look for the right motivation. Why do you want to do FinTech? Are you ready for long journey? Are you ready for up and down, even very dire conditions? Yeah, or is it just like an opportunity to make some quick bucks? Very different outcome if the motivation is different. Yeah, so this is what we are always looking for. But if I can add, I think the next big thing probably after some years, if all of us do a great job, the term FinTech will disappear. Because financial services is meant to be technology driven. And if FinTech term disappears, that means we have next generation financial services. We have better financial services, better society, better world. So then the festival needs to have a different name.
Okay, I'm not sure that was a big idea that you were pitching to the audience, but I'm going to let it slide. I'm going to let it slide this time. Jenny, you got to bring it home. Maybe now with two ideas.
Yeah. So FinTech is not everything to us. It's just a sliver, probably less than 5% of what we look at. So if I'm at a charity dinner and I'm not out there for a win, I will share with you what we're looking at. In Southeast Asia, in particular, I would be looking at air travel tech. I think that the different countries means that there's going to be more travel. Travel in terms of density, I mean, it's a huge issue, not just on the ground. All the startups are looking at how to change the mode of transportation on the ground. But we think the issue, at least personally, I think the issue can be better solved in the air.
Grab airplanes.
So it's a
Grab
moonshot.
airplanes. No, really? Grab airplane? Uber airplane? Grab airplane?
It's an area we are invested in, both in China and the US. I think if you want to, so moonshot idea, but we are funding the different infrastructure to make this possible, whether it's autonomous flight, assisted flight, but I think the short range transportation point to point, innovation is not just happening on the ground. In areas in Southeast Asia where cities can be disparate, sparse, hard to get to, yet highly dense in those areas, I'd like to see more air travel tech. So perhaps there could be a industry or panel discussion on air travel tech.
All right, terrific. Well, ladies and gentlemen, you heard it here first. What is happening next? We're going to see a lot more in the insurtech space. We're going to see a lot more kind of clever lending schemes that really get out in front of customer needs. We're going to see Grab, Uber type air markets. It's hard to imagine what that is, but I'm sure you're going to succeed at this, air tech. And then the bottom line really though is just make sure you are using the technology to do the right thing, that you're good people trying to make the world a better place, because that's what we're here for at the Singapore FinTech Festival. And let me thank my awesome panel. Give them a round of applause.